session. So, after we have learned about the balance sheet, now we are going to learn about the effect of the transaction. So, under this effect of this transaction, we have this what we call business entity concept. So, when you said business entity concept, this is where the owner may have business assets and liabilities and also non-business assets and liabilities. So those non-business assets and liabilities are not included in entity's accounting record. When you say non-business, it means that is outside of the business. So it means that is personal assets and liability. It will not be included in our entity's accounting record. But if the owner invests money or other asset in the business, so it means the item now is a business asset. So that is what we call the business entity. So let us recall about the accounting equation. In accounting equation, all assets is equals to liabilities plus owner's equity or what we call capital. So where is the position in our balance sheet? The asset will be on the left side or in the debit side, and the liabilities and owner's equity will be on the right side, shows where the money came from buying the asset. So liabilities also can be, owner's equity also can be. Now, in our business transaction, it says that business transaction is an economic event that has a direct impact on the business. Sometimes, it usually requires an exchange with an outside entity. And it should be able to measure this exchange in dollars. And of course, all transactions affect the accounting equation through specific account. So what is this account, by the way? So this account now, since we are learning accounting, account is a separate record used to summarize the changes in each asset, liability, and owner's equity or capital of a business. We will go to analyzing the business transaction.
Analyzing business transaction, there are three questions that we need to consider. The first question is, what happened to the transaction? So maybe there's a certain thing that you need to understand, that the event that has taken place. The second question that you need to consider is, which accounts are affected? What does it mean which accounts are affected? First, you need to identify the accounts that are affected. Is it asset, liabilities, or capital, or what we call owner's equity? And the second one is, we need to classify these accounts. Is it asset, liabilities, or owner's equity? The third questions that we need to consider is, how is the accounting equation affected? This is, you are going to determine now which account have been increased or decreased. And you need to make a certain that accounting equation remains balanced after the transaction has been affected. So let's try to analyze
Transaction on the accounting equation for Mary Adams Consulting business. For example, the first problem is Mary Adams, the owner of the business, invested $25,000 in the business. So the first question, what happened? So Mary took $25,000 from her personal bank and deposited it in a new account in the business name. That's what happened. Question number 2, you need to identify the accounts that are affected. So what are the accounts that will be affected? We have the cash and we have Mary Adams capital. The second question, we need to classify these accounts. So what happened to our cash, which is a type of asset, and our Mary Adams capital, which is a type of owner's equity? The third question is, we need to determine whether the accounts
have increased or decreased. So what do you think what happened to the cash? Yes, increase. And what do you think will happen with Mary Adams' capital in the business? Yes, it's also increase. So both of them increase. The cash, a type of asset, and Mary Adams' capital, which is a type of owner's equity. Now, does the accounting equation still balance? Let us see. Your cash, 25,000 you have invested. And of course, in your capital also, you have 25,000. Same. It will still be balanced. As a 25,000, owner's equity, which is also 25,000. Let's go to the second example. Let's say Mary Adam purchased office supplies for 800 cash. So first and second question, we need to understand again the transaction, we need to identify, and we need to classify the affected accounts. So what are the affected accounts? Since she bought for office supplies, so automatically we're going to have office supplies account. And since she paid that for cash, we will have cash account. So office supplies is a type of asset. Cash also is a type of asset. Question number 3. What do you think happened in this transaction? Which one increase or which one decrease? So our office supplies is a type of asset. Since you bought it, what will happen? Yes, it will increase. And since you paid by cash, what will happen to our cash? Yes, it will decrease. So one asset increase, which is office supplies, and one asset cash will decrease. So both assets are affected. Now, let's have a look in the accounting equation. Will it still be balanced? Let us see. Your cash before, you have less 800. Your office supplies, you have additional of 800. But both of them are a type of assets. In the right-hand side of the account equation, it's not affected. Because why? You did not borrow or you did not invest. So, does transaction still balance? Yes, of course. The total assets stayed the same. Although one asset cash will decrease, but one of our asset also will increase, which is our office supplies. So there's no changes for our assets. And there's no changes also for our owner's equity. So proving this accounting equation still balance, let's see our assets. We have cash, which is now 24,200 because the 800 you pay this for office supplies. And your office supplies added with 800 because you bought it. So left side of the equation, we have cash 24,200 and we have supplies of 800. So when we add this both, still we have 25,000. So proving that accounting equation still balance, let's have a look with our liabilities and owner's equity. Nothing happened with liabilities. Nothing happened also with our owner's equity. So the right side of the equation, liabilities still 0. And our owner's equity still remain 25,000. Let's have a look with another example again. Let's say you purchase an equipment on account for 300. What does it mean on account? It means it is not yet paid. It means on credit. So, for question number 1 and 2, we need to understand the transaction, we need to identify and classify the affected accounts. So, Mary is buying this copy machine on account, and she will be making the payment on over the next few years. So there's no cash was exchanged today. So now let's understand the transaction. We identify and classify the affected accounts. We have the equipment account, and we have now the accounts payable, or what we called our liability as well. Equipment is a type of asset. Account payable is a type of liability. So question number 3, what happened to our equipment and account payable? Does it increase or decrease? Our equipment, we bought it. So what do you think what will happen to our equipment? Yes, it will increase. While our accounts payable, a type of liability, since we haven't paid, so what will happen to our liability? Yes, correct. Both of them also will increase. So let's have a look for the question number 3. Let's see with our asset. We have now additional of 3,000 for our equipment since we buy. But our liabilities also increase of 3,000 since we haven't paid that. And we are going to pay that in the future. So this transaction had no effect for owner's equity. So does the transaction still balance? Yes, of course, still balance. Our asset increased by 3,000 and our liabilities also increased by 3,000. So let's say, how are we going to prove our accounting equation balance again? We have now 3 different types of asset. We have our cash, we have supplies, and we have equipment. The total of our cash, we have 24,200 because we paid 800 before for our supplies. The total of our supplies, we will have 800, and the total of our equipment is 3,000. So how much is the amount of these 3 assets? We have now 28,000 total assets. Now, proving accounting equation that's still balanced, our liabilities added with 3,000 and our capital still remain 25,000. So 3,000 add with 25,000, we have 28,000, our total of liabilities and owner's equity. So, for example, you made the payment on equipment, 400. First and second question again, we need to understand the transaction, identify and classify the affected accounts. So what are the affected accounts? We have cash and we have accounts payable. Now, cash is a type of asset, while accounts payable is a type of liability. In question number 3, what happened to our cash and what happened to our accounts payable? Does it increase or decrease? Yes, our cash decreased because we have paid our liability now. And of course, our liability will decrease, which is our accounts payable. So let's have a look with our accounting equation again. We have now deducted our cash of 400 because of the payment. And we also deducted our accounts payable because we have paid. Now, owner's equity will have no effect as we do not invest additional money. So, does the transaction still balance? Yes, of course, it's still balanced. Asset decrease by 400, but liabilities also decrease by 400. So, let's have a look, proving our accounting equation that's still balanced. What are the assets that we have now? We have our total cash, of 23,800 because the additional deduction of 400 for the payment of our equipment, and our supply still remain 800. And our equipment remains 3,000. So when we total our assets, the total will be 27,600. Let's have a look with our right side, our liabilities and owner's equity. So how much is our liabilities total now? We have 2,300. The 3,000 before, since we pay our accounts payable of 400, it will be deducted. It will become now 2,600. But our capital still remain the same as we have not invested any additional capital. So the total of our liabilities and owner's equity for the credit side of the balance sheet is 27,600. So that's all for today. Hopefully, you understand about the accounting equation and about balance sheet. See you again.
Darling, when you feel like hope is gone, just run into my arms.